other thing that we're looking at is actually unemployment. And the warning signs that we're seeing about unemployment are a little bit more alarming than those that we're hearing about inflation, because inflation itself, the government measures of inflation are all like within a reasonable range. Watch it, but it's not to the point where we have to be raising alarm bells. It's something that could potentially become an issue. But what is presently an issue is a little bit more on the employment side. Welcome to Life in the Markets. My name is Tim Russell, and today is Monday, December 8th, 2025. This week, we had another interesting week with the markets recovering from the last downturn we had. It was about a week or two ago. We hit the bottom, and we've been recovering somewhat since then. We're looking at the S&P 500 up around less than 1%. We've got the NASDAQ that was up about 1.8%. The Russell, the smaller companies, was up also roughly 0.8%. We look at the commodities. We have gold was down a little bit. Silver was up a little bit more. It was up about 1.8, 1.9%. And oil actually had a positive week as well. It was up about 0.8%. You may recall we've followed a little bit here talking about Bitcoin and where it has been going, not because we are Bitcoin believers or anything like that, but because it's in the zeitgeist. People are thinking about what's going on with Bitcoin because it has become so popular. So we follow it for informational purposes. And this week, Bitcoin had a very nice recovery. It was up about 4.8%, but that's very interesting because that comes on the heels of a 35% decline from its October high until it reached its low about a week or two ago. So it went from $126,000 per Bitcoin down to a low of $83,000 per Bitcoin. Obviously, that is a substantial drop, and that, my friends, is the definition of volatility in my book. That's a fairly volatile commodity. Then we had bonds had a roughly flat week. There was very little change from beginning to end. The 10-year Treasury is up to 4.141%. I say that, and I'm going to be interested to see what happens to the 10-year this time next week because of the Fed meeting that should be coming up. We'll talk a little bit more about that later in today's show. So what's been driving the market? We've seen a lot of anecdotal evidence from the earnings reports that have been coming out to us that are showing in some ways companies are doing well. The economy is continuing to move along just fine for them. And for others, there's struggle. There's a lot more pricing pressures and problems with their customer base and all kinds of issues that they may be facing. However, one of the things that we saw was that there are retailers like Walmart, Dollar Tree, Dollar General, Five Below. These organizations, and there are several others, have all shared a similar sentiment that while their sales have been growing, what tends to happen is that the basket size is a little smaller. The sales growth is actually not coming from increased number of products sold, but increased price of the products that are being sold. So the baskets may be shrinking, but people are coming back more and more often with smaller ticket sizes. So in terms of the volume, they're able to have a fairly consistent revenue stream, but they're noting that there seems to be more stress on the consumer. So that is something we obviously need to continue to see how this develops over time. Another interesting note, and this is a common thing we're seeing from more and more retailers, they look at their customer base and they kind of divide it up by income strata. So we've got our low income clients or customers, we've got our medium and high income customers. And one of the things that, again, is very interesting to note, some of these budget retailers, again, the Walmart, Dollar Tree, Dollar General, Five Below, one of the things that they're noticing is that the growth in their customer base is coming from the higher income customers. They have more higher income customers coming to them. So there's absolutely nothing wrong with shopping at Dollar Tree, Dollar General. Those organizations they're fine. They serve an important service or function within our economy. But what it tells me when your customer base is growing on the upper income end of the spectrum, it tells me that inflation and other economic pressures are changing the behavior of even people who would generally not go to those types of stores. That, again, is very interesting information to say, let's pay attention to inflation. Now, I say that, and that's obviously not the only thing that we're looking at in terms of the health of the economy. The other thing that we're looking at is actually unemployment, and the warning signs that we're seeing about unemployment are a little bit more alarming than those that we're hearing about inflation, because inflation itself, the government measures of inflation are all like within a reasonable range. They're not terrible. We're seeing anecdotal evidence that inflation's starting to cause problems. So watch it, but it's not to the point where we have to be raising alarm bells. It's something that could potentially become an issue. But what is presently an issue is a little bit more on the employment side. So we're still dealing with lagging employment data, but we're following things like ADP. ADP is a private payroll provider, and they provide information into the general health of the private employment markets. What they shared with us is that in the month of December, overall, there were 32,000 fewer jobs that people had lost jobs in the month of November. But what's really interesting is, again, just like the companies break down their customers by income, ADP breaks down their customers by size of company. How many employees do you have? Small companies, medium-sized companies, and larger companies. Last month, remember, the number was there was a net loss of 32,000 employees. But in the small employer segment, the total amount of job losses was 120,000 jobs for small employers. That is fairly significant. If you look at the medium size and the large size, they all on average added about 60,000 jobs, so that we get to our net loss of about 32,000 jobs this year. So it's very interesting to see that there's definitely some signs of stress within the employment world. And I think that's something that going into this week's Fed meeting, that's going to have a maybe disproportionate effect on what they choose to do about dealing with inflation versus trying to help buoy unemployment. So very specifically, this week, we see that on Tuesday and Thursday, the Fed gets together. They're going to be talking about the federal funds rate. We've talked about this a lot in the show over the last few months, but the expectation at this point is it's a nearly 90% expectation that come Wednesday at 3 o'clock, the Fed will say, hey, we're going to lower interest rates by 0.25%. Again, don't get too excited about a 0.25% drop. It's not going to change the world, certainly not overnight. It takes a while for change in interest rates to actually come through and affect the overall market. Again, just it's something to pay attention to. It's something to watch. In other news, as we're kind of moving to wrap up today, there were some interesting enhancements or advances. Advances are probably the right word in the Trump accounts. You remember these? These were those things that were part of the Trump tax bill, where if you are a child between the ages of 0 to, I think, 10 years old, or maybe you could even do it for individuals, I think up to 18, you can open a particular kind of account. You can contribute a certain amount of money to it, and that money can grow tax-free. And once you become 18, that money converts more like to an IRA kind of a format where you get taxed if you pull it out. The idea here is to incentivize saving and allowing compound interest to work for kids when they're younger, and to allow for individuals to contribute to those plans. There has been more information about how these plans are going to work and how they're going to operate. So, for example, contributions to the Trump accounts really can't be made until July 4th, 2026. You can't make them before that. That would be, I think, close to our quarter millennia anniversary here for the country, 250-year anniversary for America. So they're trying to tie it to that framework. You should be able to open an account early next year. You cannot fund it, however, until after July 4th of next year. There will be more details about that. They've told us, there's a certain IRS form that you need to use to open that account. I've got some information linked here in the show notes. You can go to our website, to the blog directly, and you can see the link there. There's another significant boost that the Trump accounts got when Michael and Susan Dell, these are the founders of Dell Computers, came out and on Giving Tuesday, they announced a $6.25 billion donation to roughly 25 million children, American children who are 10 years and under, who first of all, are not receiving the $1,000 gift that the Trump administration is trying to do for children who are newly born children. They get that $1,000. You can apply for that. Again, there's information about that in the show notes that we have for you. If you didn't get that and you're under 10 years old and you are in a zip code where the median income is under $250,000, then Michael and Susan Dell would like to allow for you to get a $250 contribution to your Trump account. This is a way of him trying to give a hand up to individuals, to children, as they're trying to make their way through life. It's not going to change anyone's world, perhaps, but it is a very encouraging sign that these Trump accounts are getting some momentum and that they're actually getting some funding. Maybe these things will actually become a real thing. Compound interest is amazing. If you can use compound interest for you, for your kids, for your grandkids, funding those Trump accounts are not necessarily a bad thing. I do have bad news for you. I can't help you with the Trump account. Those are things that are typically opened directly through the government. Well, the government will tell us how it's going to work in the not too distant future, but it's going to be opened and run, operated by the government. Therefore, it's probably not something a financial advisor can be directly involved with. I've got a very interesting link here to a CBS News summary for those Trump accounts and how those work for your kids. So again, check that out in the show notes. All right, as we wrap up today, I do want to share one verse for you. It's from Proverbs 14:23, and that verse says this: "In all toil there is profit, but mere talk tends only to poverty." You can talk all you want about the power of compound interest, but until you actually get out there and invest, you're not going to get it. You can talk all you want about the potential of your business idea or of your work ethic, but until you actually get out there and work, it's just talk. So my challenge for you today is, what are you merely talking about and not putting into action? I would challenge you today, put into action the ideas, the dreams, the hopes, the vision that you have for your future. Trust in God, because through toil comes profit. But talk only leads to poverty. Until next time, you take care. Be safe out there in the markets. God bless. Bye-bye.
The topics discussed in this podcast are for general information only and are not intended to provide specific investment advice or recommendations. Investing and investment strategies involve risk, including the potential loss of principal. Past performance is not a guarantee of future results. All information herein is from sources believed reliable, but is not guaranteed for accuracy or completeness. The team assumes no liability for any errors, omissions, or actions taken based on this material. Information is as of the date stated and subject to change without notice. Securities and advisory services offered through Genius Wealth Management, member FINRA and SIPC.